welcome back to Fast Stock Market News, where I give you all the news as fast as I can. So today was a very interesting day, guys. We start off blood red, and I'll tell you guys why, and then we kind of rallied at the end of the day, and I'll also let you guys know why. So let's just take a look and see how the indexes did. We could see the S&P 500 finishing negative 0.3% in the red. We can see the Dow finishing negative 0.46% in the red. The Nasdaq eking out another win, back-to-back days with a bit of a win, going up 0.03%. Russell finishing negative 1.07% in the red. And what was driving all this volatility? If you guys don't know, the reason we're selling off at the start was basically because the banks reported, specifically JP Morgan Chase, their earnings fell 28% after building reserves for bad loans, and also the bank suspended buybacks. Big thing that made the overall market tank for the day. Basically, this is the first domino to fall on it's going to be a line of different companies that are probably going to be reporting bad earnings, and thus analysts are going to have to revise their price targets for these stocks. As you can see, JP Morgan's earnings fell short of analysts' expectation because they built reserves for bad loans by $428 million. And overall, other things that were happening in the stock market other than bad bank earnings was basically Elon Musk. He's basically being accused by Twitter and being sued by Twitter that he just is backing out of the deal because he just wanted to tank the deal. He really wanted to get out of it. And I'm personally on the side of Twitter here. I think Elon Musk, when he realized the market was going to start to tank, he said, you know what, I want out of this sinking ship. I don't want the deal anymore, because who really wants to spend $54 million on a social media outlet? And the reason that I wanted to get to also of, though, as you can see, bad earnings in banks, we were starting to go down. The reason we kind of rallied toward the end, if you remember yesterday, the inflation basically was being priced in from the Fed funds rate that the Fed was going to raise interest rates by 100 basis points this month. So that was kind of like a foregone conclusion. Everyone was kind of preparing for it. And actually what made us rally toward the end was Uno reverse card, of course. If this isn't manipulation, I don't know what is, but this is what caused us to rally toward the end of the day. Take a look, guys.
Key Fed speak from the Fed's Christopher Waller this morning, seeming to lean against a full point rate hike despite another hot inflation report this morning. Let's get to Steve Leisman with all the very latest. Steve?
Yeah, and Kelly, it's nuanced. Fed Governor Chris Waller throwing some doubt on the idea of that full percentage point hike at the upcoming Fed meeting, saying this morning that the market might have jumped the gun at least somewhat.
The markets may have gotten ahead of themselves a little bit yesterday, that they just assumed it was going to go to 100 after that report. And we don't want to make snap policy decisions based on some knee-jerk reaction to what happened in the CPI report.
All right, at the same time, Waller, who has been, as you know, one of the more hawkish Fed officials, didn't rule out a 100 basis point hike. He said he has to look at the data over the next couple of weeks to make the call. If the inflation data is worse, he said outright, he could support that bigger hike. Either way, his comments, I don't know, they shouldn't have provided much solace to the markets. Waller was firm in supporting 75 at the upcoming meeting and said he thinks the Fed needs to move rates beyond the neutral zone of 2.5 to a restrictive level. Still, Fed funds futures did ease a bit, as Kelly said. Now the peak is in February instead of January at 360 instead of 370. The Fed is priced to back off to just around 3.1% by the end of next year. The volatility reflects uncertainty, deep uncertainty over the economy and Fed policy, and they're moving right now with almost every Fed utterance, Kelly, as you know.
Basically, those comments of whoa, 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 not so fast by Christopher Waller kind of made us rally a little bit toward the end. And regardless, he's still a very hawkish individual, and he's not ruling out 100 basis points. But that's kind of the reason why we kind of rallied a little bit towards the end of the day, guys. And that's basically the most important stock market news for the day, everyone. Thanks again for watching. I'll see you again tomorrow. Take care. Thanks again, everyone, for watching Fast Stock Market News. If you enjoyed the video, consider subscribing, commenting, or liking the video. I would greatly appreciate it. My name is Gio, and I'll see you tomorrow, guys. Take care.